Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today from Doc Jones, private investor and activist investor in the space. And Doc Jones, it's always great getting your thoughts on which companies are ringing your bell as far as the news flow, what they're doing. We're going to talk about two companies today that we've discussed a couple of times before, but you have some interesting updates. And the first one is with Magna Mining, traded on the TSX.V under the ticker NICU. We've had Jason Jessup, the CEO, on the show a number of times and had Paul Fowler on a couple times as well, and have been staying up to speed on the story. But you literally were just there on site for a site visit. So why don't you walk us through some of the key takeaways, not only on the company, but also the key takeaways from going on site visits and what you can glean from those kind of trips?
Great. Hey, Shad, thank you. Thank you for having me on again. Yes, a couple of weeks ago, I took the journey back up to Sudbury. This is my third time up there to look at the project at the Crean Hill. And they're in the middle, at that time, they were in the middle of putting together the bulk sample, the 20,000 tons that will go to the Strathcona mill, Glencore's mill in Sudbury. And specifically, it's the 109, the footwall, which is dominantly high-grade PGMs plus gold, moderate high-grade copper and some nickel. So what was really exciting is, to see the trucks and shovels on site doing their job. This team, by far, is got to be one of the best teams that I've ever seen. They all come from FNX, which was a great success in Sudbury years ago, that built from a $30-40 million market cap and over 8 years ascended to the multi-billion-dollar market cap as they proved up their thesis of taking these old brownfield sites, putting them back into production while concurrently exploring for footwall deposits, which they were very successful at. So now at this site visit, what was interesting is we had a meeting amongst the shareholders that were there, which comprised of probably 50% of the shareholders' share registry as far as the amount of shares owned by the individuals and the funds that were there. And they gave this wonderful presentation, and Gord Morrison was there. And Gord Morrison is the biggest geologist in Sudbury. He has discovered more mines in Sudbury than anyone else. He worked for Inco and Falconbridge, FNX. He was key at FNX for finding the footwall discoveries. And he walked us through the geology that they've encountered in their scout drilling, and they're seeing everything that they need, that they should find stratigraphically to vector in on a footwall deposit. And they've been doing that. They've got a number of targets and conductor plates that they're testing right now. And they're very excited and feel that it's just a matter of time. Whether that happens or not, I don't know. But it is certainly very exciting. And when you're dealing with a team that has done it multiple times before, it's not just smoke and mirrors or just trying to pump up their share base. They're completely serious about it. Yeah, so they've got three drills running. They've got one on Crean Hill that's doing infill, that's delineating the sparse drilling by the previous operator to upgrade that resource, and they're having great success with that. They've put out some holes recently in areas that were modeled as low-grade PGM halo, which it turns out that they're finding there's a massive sulfide veins that run through the class of the breccia there, which is like could lead to an accumulation of a large footwall discovery, large meaning 1 million to 5 million tons of this very rich ore. And the grades that they would pulled out is like 10% copper with 16 grams per ton PGMs. That another hole that was 16 meters of 0.7 nickel, 2.4% copper, and 10 grams per ton PGMs plus gold. And then another one 4.4 meters of 3% nickel, 11% copper, and 10 grams per ton. So these are really phenomenal world-class grades that they're pulling out of there. And what's really, really fascinating, too, is just how the team's vision of the company has evolved. While I was there, Jason Jessup, the CEO, made a point of putting up Magna's current strategic vision as far as along the acquisition side, is that they're now what they would like within the next 5 years to have 3 or more producing mines in Sudbury under their belt, producing annually 25 to 50 million pounds of copper and 20 to 30 million pounds of nickel. And in 5 to 10 years, 5 producing mines producing over 50 million pounds of payable nickel and copper, which is phenomenal. And at first I was like, how is that even possible? But doing some research and looking at the map of the assets that the majors have that are non-core, that fit their acquisition target metrics, which is 10 million tons or greater than 2% copper, nickel plus PGMs, that has footwall potential, can be fast tracked to production or already in production, high margin, high grade, low cost of capital, infrastructure in place. There is over 20 of these deposits in Sudbury owned by the majors that are considered to be non-core. And then Jason posited the potential of announcing another Crean Hill-like acquisition by year end this year, which is not that far away. And we saw what the Crean Hill acquisition did for the company if they had another one. So that is pretty tremendous. And yeah, I'm just blown away at how this company, this team has gone in 20 months to take an acquisition already to production, basically doing a bulk sample, and they're going to start building the porthole to go underground to begin the 400,000 ton advanced exploration, where they have the contract with Vale to bring 400,000 tons over the next 2.5 years to their mill, which works out that they'll scale up from a few hundred tons a day to getting to a steady state of approximately about 2,000 tons a day 2.5 years from now, mining 2.2% nickel equivalent or greater. And the recoveries are known. They're getting, as far as at the Vale's Clarabelle mill, they're getting 84% for the nickel, over 90% for the copper, about 70% for the PGMs. So that's the contact ore that they would send over there. And then looking at what they're doing with the bulk sample, the 109, which was excluded from their deal with Vale because it's high grade PGMs and gold, that they're doing a batch bulk sample at Glencore. So they can run their 20,000 tons through the mill independent of anyone else's ore. They can stop and start along the way, add different reagents to see what kind of recoveries they can get, because their belief is that they will be able to boost the recoveries from what the 70% they're getting at Vale for the PGMs up above 85% around there. And on greater than 10 grams per ton ore that they're sending there, you're talking about capturing another gram and a half in your recoveries, which works out on the math. That's like another $60, $70 a ton that goes right to the bottom line. And when you're dealing with, say, in the end, they end up sending 1,000 tons of the contact ore to Vale and 1,000 tons to Glencore. 1,000 tons a year there, that's 350,000 tons a year times an extra $50, $60. You're looking at another $20 million of free cash flow going to your bottom line because you're just using a much more amenable recovery method there to get the PGMs from the footwall. So yeah, these guys, it's really, really awesome. And they have all these catalysts that are coming from here to the end of the year. They have another 11,000 meters to drill on their 25,000 meters that have been budgeted for this year. They also, at the end of September, they plan to release a new PEA that just focuses on the high grade underground that they will be sending to these two mills under either a toll milling or an ore selling agreement, looking at that and the higher margin, higher cutoff grade there. They have the PEA coming out, a new resource estimate. You have the results, the grade reconciliation from the bulk sample, which should be fairly positive when you consider the drilling they've done since. And they're mining that ore, like those grades that I just talked about. That's all near close to surface that will be included in the bulk sample. And that bulk sample should probably yield them about, it's $4, maybe $5 million in free cash flow, which, is not a huge amount of money, but it's still money goes to the treasury, gets added in to develop the portal in the underground, it gets added to the stream. And as they're developing the underground, they will be mining, some waste being put aside, some ore being shipped to the mill off and on, which should potentially completely fund between doing a gold stream and the bulk sample revenues and cash flow, and the cash flow from the 400,000 tons that they will be doing over the next 2 years, fund basically all the operations and all the development to get them into steady state production. At 2,000 tons a day, they should be able to produce for over a decade at that rate with these high grades. Sprott Capital was at the site visit, and I talked with the economic geologist there, and this person is very, very, very intelligent, and she walked me through the model, and it was very interesting because she ring-fenced about 10 million tons that would meet that criteria of being over 2% nickel equivalent or better for the underground production. And at 2,000 tons a day, that's 600, 700,000 tons a year, you're getting to, on 10,000 tons, that's like a 14-year mine life just on that. And then once that's done, all your sunk capitals has been paid. So then you go back and you're not sterilizing the ore body. You go back and then you can mine the stuff that is under 2% nickel equivalent. And then there's potential discovery. There's the expansion at depth and along strike. So it's really exciting. I went to the ore pile and I plucked this volleyball-sized piece of ore that is just impregnated with chalcopyrite and penlandite. And yeah, it's on my mantle. It's my little tactile touchstone where I go, yes, this is something that I own, that I'm looking forward to the next 5 to 10 years of this company growing to a multi-billion-dollar enterprise potentially, right?
Well, that sounds like a nice take-home souvenir, Doc Jones, but also a reminder of, the high-grade nature of the ore body there. And I think it's interesting that the company has relationships with both Glencore and Vale, and that 109 zone going to Glencore, but then the 101, 105 in the main zone teamed up with Vale. So they'll be able to go into production. And like you say, the bulk sample and the gold stream help fund operations in the near term. I'd like to get your thoughts if they're considering another acquisition of Shakespeare, not getting lost in the dust here. They still have the master plan, which Jason has shared with us on the show before, that eventually, if they can get a couple assets up and running, that they would be able to then possibly build their own processing center at Shakespeare, and then maybe not have to keep the toll milling going, but have options at least. What do you think about the Shakespeare asset within their portfolio? Is it kind of going on the back burner if they're going to make more acquisitions and if all the focus is at Crean Hill, or do you still put any value in the Shakespeare deposit?
I think Shakespeare is extremely valuable. For one thing, the deposit there is over 20 million tons, and more importantly, it's fully permitted for a mill, tailings, and closure plan. So I think, I can't speak for the company, this is my opinion, obviously. I think what we'll see is they'll get Crean Hill into production. That's going to be generating very healthy margins and cash flow to a company that will be essentially debt-free, just accumulating cash. They acquire another asset, and he said this is very, very interesting. During the meeting, Jason said the assets that we're looking at to acquire, potentially announce something between now and year end, as far as a deal, could potentially be in production before Crean Hill. And what I think he means by that, Crean Hill reaching steady state production, which would be about 2.5 years from now. So then my mind kind of got a little blown. I'm thinking, so 2.5 years from now, you could have 2 mines in production, the compounding cash flow of that, you would be able to build Shakespeare fully funded. 3 years from now, you could start building that and be fully funded and just using the cash flow or borrow against the cash flow of these Crean Hill and the other producing asset that they potentially could acquire. So I think long-term, the strategy is still the same. I know that Glencore and Vale have incentivized the company not to build the mill in the lines. They've given them really, really favorable contracts for their ore selling and their toll milling. So I guess in the end, it becomes what is the best use of capital at the time. I think, 3 years from now, we'll probably see something in the lines of where you'll get a new PEA or feasibility study that includes the producing assets and Shakespeare and building that Shakespeare mill. Because in the end, that's where you're going to get the most superior margins. And then once you're producing your own concentrate, then you pretty much rule the world, so to speak, because then you have the offtake that you can sell as well, which becomes a great strategic value. So yeah, these guys, if they execute the way that they plan and how they've proven they've done in the last 2 years, then this is going to be a Canadian premier mid-tier mining company in the next decade. If 5 to 10 years from now, they've got 5 producing mines in Sudbury, and the majors need feed for their mills, need feed for their metal for their smelters, and they have all those. It's basically the 2 majors own all the land in Sudbury, and then there's Magna, and Magna's already proved that they can provide feed for them. So it's in their best interest to drop down their non-core properties that would never see any kind of development for the next few decades anyways, because it pulls forward the value of those properties to the majors, which currently have zero value on the balance sheet. So to answer your question, yes, I think Shakespeare will be built at some point. You could see a scenario where the Shakespeare is 4,500 tons a day, right? Where they're mining much past 4,500 tons a day in a scenario where they have, 5 producing mines where they're toll milling as well or selling as well as running Shakespeare, where maybe they're mining 8,000 tons a day, 6,000 tons a day, and they're sending 3,000 tons a day to the majors while they're processing 4,500 tons a day at their own facility. Of course, there's a lot of what ifs between here and that statement, but they're certainly on the path to do that. Yeah, and do it in a way that is very favorable to shareholders with very little dilution along the way. Yeah, I'm very interested to see what property, like I have my map of those assets in Sudbury that fit that criteria, and I'm very interested to see what deal they end up closing on between now and year end or in the first quarter of 2025, whenever that deal comes together, should it come together. Another Crean Hill like deal would just be phenomenal. So yeah, I think they will build it, to answer your question.
Well, Doc Jones, I appreciate getting your thoughts on it, just how you're looking at it as a strategic investor in the company. And I do think there's a lot of value there in Shakespeare still to unlock. But I do love this idea of also picking up non-core assets from the majors too. It's another good strategy, and they've done a great job with Crean Hill. So if they can find Crean Hill 2.0 and find another one, more power to them. And it gets something going in the Sudbury area. And I also think it's significant that a lot of people claim they want to see copper production come online, and there's so few companies that are getting anywhere close to bringing on copper, along with all the nickel and PGMs. They have a lot of copper in there too. So there'll be a copper producer, a nickel producer, a PGM producer. I think that's significant. But speaking of copper and speaking of polymetallic companies, I'd love to get an update from you on Emerita Resources. I think you follow this about as close as anybody, and you talk to management often. Traded on the TSX.V under the ticker EMO. We have had the company on the show in the past, but it's been a while, and they've had a slew of news out. So give us a quick snapshot of Emerita Resources, some of the key news releases, and also a key financing that they've done just in the recent past.
Yeah. So Emerita is just going gangbusters right now. So most people think of it as the court case for Aznalcollar, but their other 100% owned property, the IBW, which they put out a resource on, they recently were awarded a distinction of strategic importance, that project, from the Spanish government, and the government included both political parties, so unanimously gave them the distinction of strategic importance. They are the only non-producing company to receive such distinction. What that means to the company is that they are appointed a high-level official to help fast-track their permitting. They've already submitted for the exploitation permit for the IBW. And then after they've submitted it, they drilled the third deposit on the property, and they made a major discovery there on the Alkira. So they've discovered a high-grade copper and gold zone there on Alkira, which is the third deposit. And in their exploitation permit, they had to submit a feasibility level document as far as where they're going to put the infrastructure and all that. Now, where they're encountering this zone is right along the haulage route that would go from Romanera, the largest of the 3 deposits, passes through Alkira to La Infanta, where the infrastructure would be placed. So the IRR on this deposit has grown tremendously, because the incremental capital to just drift off of the haulage route to bring in a few million tons of high-grade copper and gold is very small. So when they eventually put out a PEA, I think it's going to be very, very robust. And then they also made a discovery just a few days ago. They announced on the Nuevo Tintillo land package, which abuts the Rio Tinto mine, which is the largest accumulation of sulfides in the world. That's where Rio Tinto, the company, got its start. Now that mine is run by Atalaya, where they've encountered some high-grade gold and silver gauze in over a 400-meter strike length. This is really interesting because in this area, when you see high-grade copper, it generally tracks towards it being a copper-dominant system. So they're going to do the geophysics and do some modeling for a drill program there at some point and see what's below the weathering weathering line, the water table below that, because the gazon is essentially where water has come in, weathering, and has oxidized and leached away all the base metals, leaving basically only the precious metals. So it'll be interesting to see what's below the water table there, and see what's in the sulfides, because the gazon is a massive sulfide that has been eroded and weathered. And then they announced a really amazing financing deal. And the reason why I say it's amazing, because this market is terrible for financing, is it works out to $21 million Canadian, a credit line with Emerita Resource Capital, which is a large resource-focused lending firm, for $21 million straight credit line. So it's not convertible. There is a sweetener of a percentage of warrants on the back end that are priced at a VWAP plus 25%. They drew the first about 9 million of the credit line. And so those warrants were priced at 82 cents, which the stock now is at, 62, 63 cents. But the important thing with this money, it gives them the ability now to ramp up and drill out Alcura, continue delineating the Romanera deposit, which they haven't done much drilling there, I think, since December when they discovered the stockwork. It's getting deep there, but they're hitting like 40, 60 meters of mineralization. They had one of the last holes there. They had 67.5 meters of 1% copper, a little bit of zinc and lead, some gold, and within that, there's a high grade zone of 2.5% copper and, about half a gram gold and half a gram silver over 10 meters. So they're really firing in all cylinders, and they also were granted the exploration rights to the Ontario claim package, which adjoins the IBW, which has the Los Celis mine, which is on the same volcanic horizon which La Infanta, Alcura, and Romanera are on, and then continues through to Los Celis, where there's the historic Los Celis copper mine where they were mining at 6% copper in the 1900s. And then that volcanic horizon continues into Portugal to the Lundin's and Neves Corvo mine. So it's a very productive horizon. So they have, including they did a financing a couple of months ago of $5 million. And so with this 21 million, that 5 million, they have about 3 million in a tax refund coming. And at that time, they had a couple million in cash on the balance sheet. So right now, I imagine their liquidity is around 28 million, which is more than enough to run for the next year or two, as well as to get to the resolution of the Aznalcollar criminal trial, which starts in about 6 months. And that in itself is a huge catalyst for the company. We've talked about it before, that land package has over 80 million tons of high grade on it. The tender was to put the mine back into production. The in situ value of just a high grade ore exceeds 25 billion. There's 4 deposits. So it's a very, very important land package. That's why we're in a court case for the last almost 10 years, and it's finally coming to a resolution beginning in March 2025. And everything is as it stood before, where there's 16 people going before the judge to face criminal charges, serious crimes, and if there's one crime committed in the awarding of the tender, that tender is disqualified, goes to the next qualified bidder. Emerita is the only qualified bidder next in line. And we've had 5 Superior Court judges rule that crimes were committed. We have 3 levels of court that have ruled crimes were committed in the awarding of the tender. So, my money is where it's always been on the fact that we win. But barring that, IBW is shaping up to be a tremendously valuable project. They're probably now, once they update the resource, I think we're well north of 25 million tons of high grade between those 3 deposits and growing. And with this money, they're going to be able to hit this extremely hard and really, really show that this is yet another world-class project.
Well, I think we'll wrap it up there for today, Doc Jones, but a great deep dive there in Emerita Resources and plenty of value drivers at IBW, whether or not Aznalcollar gets awarded to the company or not. They've got a lot on the go. That was a great financing that they were able to pull off in a tough market, and a lot of news there that you just blasted through for us. So I really appreciate the update, and I appreciate the update on Magna Mining and your site visit and going there in person and just how that is starting to develop into a producing company here. So exciting on both fronts, and definitely keep us posted of more companies that are on your radar, and we'll get you back on for an update in a month or two. Always looking forward to our next conversation.
Sounds good, Chad. And how often do you actually see a junior mining company actually get to first revenues? Like, that tells you what a unicorn Magna is, right? Like, it's incredible. Yeah. Look forward to chatting again.